National People's Congress has just concluded. And with us at the Asian Investment Conference to speak about some of the targets they set out is Vincent Chan, Head of China Research at Credit Suisse. Vincent, could you talk us through some of the key economic targets announced at the MPC?
The economic growth target is 7.5%, and the inflation target is 3.5%, and the M2 growth target is 13%. To a large extent, I think this is in line with the market expectation. The M2 growth is slightly slower than what the market expects, though. So I think it probably reflects that the government, on the one hand, want to ensure a relatively stable growth, but on the other hand, there are some concern about the strong loan and credit growth in recent months. So they set a lower than expected money supply target.
So what can they do against these concerns?
Recently, what we have seen them doing is open market operation by taking away liquidity from the market, from the interbank market. So I think it helps a little bit. At the same time, I think the government in the next couple of months, I would expect them to tighten the control on non-bank credit, because non-bank credit or shadow banking is a very fast-growing area in China in the last few years, and it has raised quite a lot of concern among the intellectuals as well as the policymakers. So I think that will be part of it. Bank loans will also be another area, but it's relatively less an issue.
And they also seem to be focused on income inequality. Will the gap between the rich and the poor start to narrow?
Well, okay, be realistic. It's very difficult. The government will probably try to do it is by raising the minimum wage in China, by reducing the role of government, etc. But I think that if you look at the history of experience of other developing economies, usually it takes a very long period of time until you can solve the inequality issue. I actually don't expect the inequality issue to be much improved in the next 5 years.
What investments will drive growth in the Chinese economy this year?
Well, government investment is still the most important thing. Infrastructure investment growth has been accelerating from as low as almost 0% in the beginning of last year to now 20% growth. I think this is still the most important driver. Property investment is another one. And I think going to the second half of second half of this year, I actually think that export growth will become in a better position because of the stabilization of the global economy. Hopefully, this is the case. Consumption will be affected by the anti-corruption campaign, so it's not very good. Industrial investment is affected by the excess capacity problem. So I think this year, if you ask me, the most important driver is still property and infrastructure.
The West seems to be looking to China to play a greater role in resolving the economic downturn, and the new leadership seems to be acknowledging it. Do you think they will act?
The problem at the same time is that China still has its own agenda in terms of economic policy to follow. I think the Chinese government don't mind to help the world on condition that it helps themselves first. So I will say that this is secondary. I will say it's secondary in the policy agenda. As you can see in the MPC or in the various government statements, they talk about international cooperation, particularly in areas like exchange trade. But I don't think China will want to commit too much in this process. China agreed that it needs some global rebalancing. China will want to play some role in global rebalancing, but this is not very fast. This cannot be achieved in a very short period of time.
Thanks, Vincent. For more insights from thought leaders, check out the Asian Investment Conference website.